Hello everyone, welcome to the 128th episode of me learning how to trade in Forex. So in the last episode we went through what is your attitude towards risk quiz, and the outcome of that is I am a conscientious person. So yeah, a conscientious person, which is a conscientious person apparently. So I forgot what the description says, but I think it's good to be conscientious. So yeah, and also your attitude towards risk is crucial when determining the success of your forex trading endeavor, and this could help you find out which trading style is best for you, what kind of system you should use, the appropriate trade management techniques, or how you can improve your trading in general. So now we're on to the last quiz, which is what kind of stop suits your trading style. So quiz, what kind of stop suits your trading style? Date is the 7th. Alright, let's get started then. We can't stress enough how important proper risk management is to succeed in forex trading. To help keep us from losing our risk capital, we have learned in the senior year of the School of Pipsology all about stop losses. But out of the 4 kinds of stops we discussed, which one do you think suits your currency trading personality best? So, take the results with a grain of salt. Results you get are just recommendations based on your answers, are meant to get you onto the right path. As you get better, keep an open mind to all new experiences and realities to help you evolve and grow your trading abilities. Okay, so what kind of stop suits your personality? Knowing how to set stop losses is a crucial skill for a trader. Having a predetermined point of exiting a losing trade not only provides the benefit of cutting losses so that you may move on to new opportunities, but it also eliminates the anxiety caused by being in a losing trade without a plan. In our School of Pipsology, we discussed the 4 different ways of setting stops. See which types best suits your personality. Alright, let's go. What's the first thing that comes to mind when you hear of risk management in trading? Not losing my entire account, of course. Determining at which point my trade idea would be wrong. Giving my trade enough room to breathe depending on the pair I'm trading. Keeping my money tied up in a trade for a specified amount of time. Risk management. Determining at which point my trade idea would be wrong. Keeping my money tied up in a trade. It's definitely not the 4th one. Give my trade enough room to breathe, depending on. I don't think it's going to be the 3rd one. It's either between the 1st one or the 2nd one. Determining at which point my trade idea will be wrong. I think it's more towards the 1st one, to be honest. Yeah. What's the first thing you do when you wake up in the morning? Plan what I have to do for the day. If it's a weekday, I'll rush through my morning routine. If it's a weekend, I'll hit the snooze button. My usual morning routine: take a shower, grab a cup of coffee, read the paper, brush my teeth. Should I go on? Check if I have enough money in my wallet so I could swing by the bank if I'm running low. That one. Which among the following workouts appeal to you the most? Plyometrics. I like doing natural but intense body movements in a short span of time. I'm a yogi. I enjoy having my own personal space to stretch and sweat. Running. It's a great workout, plus it doesn't cost anything. I just like to go to the gym and try every machine in there. What is plyometrics? I like doing natural but intense body movements and I think running, to be honest. Which of the following reasons are you most likely to give for a breakup? It breaks my heart to say this, but I just don't see this going anywhere. It's not the right time. Sorry, babe. I need space. You're suffocating me. I give and give and give. I feel like I'm losing myself. Um, that one maybe? Which of the following do you hate the most? When my account when my account takes a big hit, when the markets are wild and jump all over the place, when my trade idea is invalidated, when after opening position the market doesn't move for a long time. It's either the first one or the third one. I think it's the first one, to be honest. When my big idea takes a big hit, when my account takes a big hit. You see a setup, but the market is already moving. Quick, what's the first thing you look at before you enter your stop? You see a setup, but the market is already... what's the first thing you look at before you enter your stop? I'll take a glimpse of the day's range and estimate how high or low the pair has gone from its opening price. I'll take a glimpse of the day's range and estimate how high or low the pair has gone from its opening price. I don't think I'll bother putting a stop yet. I'll just close after some time or when I leave my desk. Definitely not the second one. My account balance. Easy support and resistance levels. Account balance. Enter your stop. Support and resistance levels. Take a glimpse of the day's range. Estimate how high or low the pair has gone from its opening price. Enter your stop. Before you enter your stop. Before you enter your stop. Either the first one or the third one, I think. I think the third one, because if I don't have enough balance, then I don't want to be like margin called, so I think my balance, yeah. How do your friends usually describe you? Spendthrift. I'm the voice of reason when we're about to splurge our moolah. Very punctual. I'm never late for anything. They usually tease me for being goody two shoes because I always follow the rules. They say I'm moody. Is that a bad thing? If it is, I'll be very sad. If not, I guess I can live with that. I think punctual. How do you pick which currency pairs to trade? It depends on which pairs have good setups for today. I go for the pairs that I'm usually profitable with. I tend to trade the pairs that respect support resistance levels more often than not. I like the pairs that make big moves. I want to catch a lot of pips without staring at the charts for too long. Go for the pairs usually profitable with. I think either the second one or the first one. Maybe first one. You just quit your job. Why? I feel like I'm moving further away from my career goals. My boss is too unpredictable. 1 minute is my best friend, the next is my worst enemy. They don't pay me enough. How am I going to save up for an R3 with this salary? It's been 5 years since I've entered this company. I still haven't been promoted. Either the third one or the fourth one. Probably the third one, to be honest. Because I think if a company won't pay me enough in the first place, then I won't be hanging around for that long. I'll try to get out when I can. Your friends are nagging you to go out with them, party all night, but you're feeling lazy. What excuse do you usually give? I'm not feeling so well. I think I'm going to have a fever. Not tonight, maybe some other time. Sorry, I'm running low on cash today. Call me when it's payday, but the club is miles away from me. I don't want to drive that far. Not tonight, maybe some other time. You have a trade open for over 2 days and the market has been relatively flat. Which of the following is going through your minds? As long as I ain't losing money, I'm a-okay. Oh man, the trade is going nowhere. I'm wasting time on this when I could be trading somewhere else. Something else. Ain't no thing to me. My trade idea is still valid. See, the trend line hasn't even been broken yet. No worries, the pair is still within its average true range. I think as long as I ain't losing money, I'm okay. Flashback time. You're 7 years old and the school bully's picking on you again. When will you stand up to him? When he crosses the line and embarrasses me in front of my friends, enough is enough. Not now, but next week, for show. After he's taken all my lunch money, I can't go hungry now, can I? I'll strike back when he appears to be weak and vulnerable. Mwahaha. That one. Which among the following statements can you relate to the most? Time is gold. Yesterday's history, tomorrow's a mystery. Today is a gift. That's why it's called a present. Oh, that's from Master Oogway. What you see is what you get. Money's only important when you don't have any. Damn, money is only important when you don't have any. What you see is what you get. Time is gold, I think. When you go to dinner, what do you usually say to yourself in choosing where to eat? I heard the service is good at that place. I think I'll eat there. The food looks so yummy on the menu. I'll eat there. I think they'll take a while to prepare the food. Can my tummy wait a bit longer? I wonder how much moolah I still have left in my wallet. That one. What if Santa Claus were real when he told you that you could have a superpower for Christmas? What would you ask for? The ability to travel back in time or to the future. I don't want superpowers. I want to be like Batman. All I need is some cash in the bank, a super cool car, and a butler. I want X-ray vision. Give me some mind reading skills. Either the first one or the third one. Well, the last one, I mean. This or this. Mind reading, or go back to go back in time, or to the future. Mind reading, or back to the future, or back in time, or to the future. Mind reading, maybe. Mind reading. I think that'd be cool. Yeah. You should try equity stops. You're not a big Jessie J fan and think that it's always about the cha-chings and the bubblings, then equity stops may tickle your fancy. You often look at your account balance and the amount you could possibly lose on a trade, but be warned. Although it sounds like a good risk management strategy, trades shouldn't only be based on how much you're willing to lose. True. Keep an eye out on chart and candlestick patterns too. Try equity stops. Quiz outcome. Try equity stops. Okay. Yeah, that makes sense. Because I think in the quiz I was too focused on seeing how my account balance is doing and not losing too much relative to my account balance, so that's probably why it's giving me a warning there, because not everything is about your account balance. So yeah, okay. Okay. Graduation speech. Oh my god. Graduation speech. Yay, you made it. Congratulations, you've read all 6 gazillion pages of the School of Pipsology, and now you have everything you need to conquer the Forex world. Retire in a year or two, and then go travel the world in your Gulfstream G700 jet, right? Think again, noob. I'm still a noob. Sorry to burst your bubble, but you have just barely scratched the surface. We're not going to sugarcoat things. We told you early on that it was going to be difficult. If you're a noob and just finished the school, you're most likely going to be horrendously bad at trading. But that's okay. Unlike noodles, there's no such thing as an instant expert currency trader. Anything that's worth learning, well, takes time. That's why instant noodles taste disgusting. Anything that's worth learning, well, takes time. That is very true. Going straight into the markets and trading a live account would be like trying out for the NBA just right after reading Basketball for Dummies. You probably get outsmarted, out-hustled, out-muscled and out-maneuvered. You just haven't developed the skills or mental/physical conditioning enough to hang out with the pros yet. It's the same thing with the financial markets. The trading world is dynamic and complex. It's ruled by brainiacs with PhDs and MBAs from Ivy League schools, who have huge amounts of capital and all the technological toys money can buy. When you enter the Forex trading world, you have to be ready to dive in and wrestle with the biggest sharks, and they love feasting on noobs. Are you scared now? Good. We want to make sure you understand that even though you've got to have fun in everything you do, Forex trading is a serious business and you have to approach it that way. With all that said, anyone with the passion and commitment to learning this business has a chance to get their small piece of a very, very big pie and then some. Yes, you can make it, but before beginning your Forex trading adventure, here are a few lessons we've learned that we'd like to share to help you get started on the right path. Time is your most important investment as a trader, and also in life, I think. Time is your most important investment as a trader. A common mistake by many new traders is that they think they can make money fast. While it's true you can make money in a short amount of time, it doesn't mean you will end up profitable in the long run. Although you can make money trading Forex in a short amount of time, it doesn't mean you'll be profitable in the long run. A typical scenario is that a new trader reads a little bit about trading Forex, finds a system online that claims to make money quickly, and then jumps right into trading because he feels like he's got enough of a background to make millions of dollars. Unfortunately, after the honeymoon period is over and the excitement settles down, this new trader now realizes that trading isn't as easy as he thought. The system doesn't seem to be working like it claimed it would, and he has no idea why the market is doing what it's doing. The most important thing you can invest in as a Forex trader is your time. Important thing you can invest in as a Forex trader is your time. Trade sure. Every single trading day is a learning experience, and if you stop learning, then you will never become a truly successful trader. Take into account how much time it takes you to learn the basics, then consider how much time it would take in your daily routine to read charts, news reports, record your trades, and then be in the markets. Every single day is a learning experience. Take into account how much time it will take you to learn the basics, then consider how much time it would take in your daily routine to read charts, news reports, record your trades, and be in the markets. For someone who can dedicate a full-time job mentality to Forex trading, then there is no problem. For someone who can dedicate a full-time job mentality to Forex trading, then there is no problem. However, if you're like most people, you may have a job, schoolwork, tuber lessons, TikTok dance lessons, so you cannot exactly dedicate your entire day to trading. This doesn't mean that you can't trade, but it should give you some realistic expectations when it comes to determining your trading style. You probably can't be a scalper or day trader, but maybe longer term trades will work better for your schedule. Each day requires your time to analyze the market because news makes the market move. It's important to consider the economic developments going on around the world and to make it part of your daily routine. When it comes to determining trading style, you should have a realistic expectation when determining your trading style. But maybe longer term trades will be better for your schedule. It's important to consider the economic developments going on around the world and to make it part of your daily routine. 5 things to consider in your market analysis. 5 things to consider in your market analysis. FX market developments. Look at what the talk of the town is in the Forex world. See what the analysts are buzzing about and how the currencies reacted. Look at what the talk of the town is in the Forex world. See what the analysts are talking about and how the currencies reacted. News releases. Know what news reports are coming out each day and how they affect the markets. Know what news reports are coming out each day and how they affect the markets. The more important the news report, the more movement you can expect to see in its currency. The more important the news report, the more movement you can expect to see in its currency. Make sure you check out our economic calendar. Market prices of other asset classes. price of commodities like oil or bonds like US Treasury yields can affect the way currencies move, so it's important to find out why these things are rising or falling and keep that in mind when trading currencies. So the price of commodities and bonds or bonds can affect the way currencies move. Can affect the way the currencies move. So it's important to find out why these things are rising and falling. So why does oil price move up or down? And keep that in mind when trading currencies. It's important to find out why these things are rising or falling. Therefore, it's important to know why these things are rising or falling. So then it could have like a domino effect on the currency prices, basically. Falling, and keep that in mind when trading currencies. Current events. Check out many news websites and get to know what is happening across the globe. Events such as major elections, military conflicts, and political scandals can all affect currency movements or global risk sentiment. Look at different news websites. And get to know what is happening around the world. Events such as major elections, military conflicts, and political scandals can all affect currency movements or global risk management. Global risk sentiment, not management. I thought it sounded wrong for a sec. Risk sentiment. Review the charts. Finally, after going through your daily economic analysis, you have to look at the charts. Charts will give you insights into key support and resistance levels, trends, and possible price points in which to enter the market. After going through your economic analysis, look at the charts. The charts will tell you key support and resistance levels, trends, and possible entry points. Into the market. Okay. Trade like an FX dealer. Trade like an FX dealer. Meet Arnold. Arnold is from Pipsology and is a bodybuilder chef who trades. Like many other trades, he has a mechanical system based on breakouts. Like many other traders, he has a mechanical system based on breakouts. Arnold even has a special name for it, the Terminator system. He follows his system with rock solid discipline, which is how he got his abs and bazooka biceps, and with no emotion. He hopes to terminate enough pips so that he can buy his own Harley Davidson and drive down Pip Nice Beach. Unfortunately for Arnold, despite following his game plan not letting the markets get to him, he struggles to make consistent profits. A typical scenario for Arnold. Arnold gets a buy signal from his Terminator system, as Euro USD is breaking out of his current resistance level. He buys at the market. After being up a couple of pips, the price reverses and stops him out. Minutes later, he gets another signal. This time it's to short Euro USD. Like any good trader, Arnold follows his system faithfully and sells at market price. In just a few seconds, he's up 10 pips, and it looks like the pair is headed for more lows. Then all of a sudden, the momentum is lost and the pair begins to consolidate. Another couple of minutes pass by, then suddenly price reverses back up and hits Arnold's stop loss order, but only to shoot down another 100 pips. He keeps telling himself, "I'll be back." Only if Arnold knew the simple truth. It's a zero-sum game. As we've said time and again, trading the Forex market is not an easy task. You can be the most disciplined trader who always follows his trading plan, keeps within his risk management rules, but still see a majority of your trades be losers. What's worse is that after getting stopped out, you see your price eventually go your way and hit your profit targets. One has to remember, Forex trading is a zero-sum game. It's a zero-sum game. Whenever you put on a buy or sell order, there is someone out there taking the other side of your trade. Someone wins and someone loses. You put on a buy or sell order, there is someone out there taking the opposite side of your trade. There is someone out there taking the opposite side of your trade. Someone loses and someone wins and someone loses. Most of the time, the one who's taking these positions is a Forex dealer. Forex dealers are professional traders who take on the opposite positions of retail traders. Most of the time, the one who's taking these positions is a Forex dealer. Most of the time, Forex dealers take these positions. Forex dealers are professional traders who take the opposite positions of retail traders, thus providing the liquidity needed for the Forex market to work efficiently. However, banks are in the business of making money as well, and dealers can earn tons of profit by quickly unloading their positions, making money via the spreads. The truth is that Forex dealers actually do win most of the time, and for this reason you should try to trade like a dealer. You must be thinking, a dealer? I've heard so many bad things about dealers. They never fill in me at the right price. The spreads are whack. Why the heck would I ever want to be like one? Well, to be honest, dealers are just like you, someone who's trying to make some moolah every time the market moves up or down. But because dealers have so many advantages, the spread, information, order flows, etc., retail traders are at a major disadvantage. If you know how dealers think and trade, then you could overcome these disadvantages and become profitable as well. Okay, this is very new. Learn how Forex dealers think and trade. To overcome the advantages they have. Because dealers have so many advantages, the spreads, information on order flows, etc. They have information on order flows. So they can see how many people bought or sold a trade, right? It's kind of OP, that is. Wow, okay. Right. Never make the first move. Unless you're a good looking dude or gal who's trying to win over his or her crush, never make the first move. What we mean by this is that you shouldn't always jump in when you see the market moving so quickly. Dealers know that about 80% of the time markets are ranging. Dealers know that about 80% of the time markets are ranging. This means that sharp and sudden moves are most likely to be faded. This represents a good opportunity for dealers to make some profits. Okay. Don't always jump in when you see the market moving so quickly. Dealers know that about 80% of the time markets are ranging. This means that sharp and sudden moves are most likely to be faded. This represents a good opportunity for dealers to make some profits. First of all, why will it most likely to be faded? Remember, dealers work for banks, so they've got two advantages. More like tricks if you ask us, up their sleeves. Dealers work for banks. First, they can see the orders that retail traders have and want to take. Secondly, they've got a ton of cash to help back them up and move the market. Let's take a look at the chart to see how dealers can use these tricks to their advantage. Below is a 5-minute chart of Euro USD. Here we see that the German ZEW Economic Sentiment Index, a high impact report, has just been released. Retail traders looking at their charts see that Euro USD is dropping, so they decide to get in on the action. They figure it's looking pretty good. Euro USD just dropped 20 pips in the last 5 minutes. This will probably keep falling and test the daily low. But wait, that's what the average retail trader is thinking. What are the dealers focusing on? Dealers know that release of data normally causes spikes in price as traders jump in and out quickly. They also know that most of the time the first move after a news event is a fake out. Whoa. And that price normally reverses to levels before the data was released. What happens is that dealers with the financial backing of their respective banks and hedge funds will take on the opposite position and fade the move. And since their collective efforts cost money, outnumber those of us retail traders, our position gets stomped on like little ants. But wait, looks like the move won't be sustained and is fading. In the chart above we can see that the down move wasn't sustained. Dealer's position is now pushing the price up to the point where price reversed, broke 1.29 and looks like it's heading for new highs. All of a sudden the price reverses and this is where the magic happens. Chances are most people will set their stops just above 1.29. In order to reach his stops, dealers probably took more long positions using their own money in order to push the price up to those levels. We'll explain this in more detail later. Once retail traders saw that price was making a new daily high, they probably thought, oh man, this baby's going to keep trading higher, I need to buy, click. Now that retail traders have changed their mind and want to buy Euro USD, dealers can now take advantage yet again and close their former long positions and then going short again while making money off the spread. Ka-ching. But of course, dealers, banks and trading institutions are the true players in the market. That's why they're called market players, market makers. They make the market move. Once all the retail traders get in on their long position and place their stops orders below 1.29 resistance, dealers can once again make a run for those stops and make the money off the spreads. Price ducked right back in and stayed within the range for the rest of the day. The 1.29 held as a resistance. And we'll take a look at that. Price did trade a little bit higher, but then it faded and dipped back down under the 1.29 handle. And those retail traders who decided to go long on the break for new highs probably had their stop losses hit. As it turns out, that 1.29 resistance ended up holding the rest of the day. You can see how dealers use their considerable advantage to move the markets in their favour. This is why you shouldn't always go and take the first move, as chances are you might get caught in a fake out. Wow, okay. That's a lot of this means sharp and sudden moves are most likely to be faded. Since dealers work for banks, they've got two advantages. They can see the orders that retail Forex trader have and want to take. They've also got a ton of cash to back them up and move the market. Dealers know that the release of new economic data normally causes spikes in prices. They also know most of the time the first move after a news event is a fake out. And that price normally reverses to levels before the data was released. The dealers will then take on the opposite position of retail traders and fade the move. So basically stop it from happening. Price but then faded under 1.29. Don't always jump in when you see the market moving so quickly, as the first move might be a fake out. Okay. Didn't know that dealers was a thing until they said it now. Okay. Yeah. Maybe if looking at past price history and stuff, is it possible to spot when like dealers are interfering with the market? Maybe it is. Like you could like align the news events with the chart and the price action, and see that like if a positive news event is released, then the price action should go up. But then if we see a sudden drop, then maybe that could be the dealers trying to do something there, or it might just not be. I don't know. We'll have to see. Right. I'm going to leave this episode here then. So in the next video, we're going to carry on with the last section of the School of Pipsology, with the lesson of focus on the process, not on the profits. So thank you all for watching. Peace.